Welcome to our daily Forex market analysis. This is for Thursday, March the 7th. Now, if you're watching this video, I'm sure you're well aware that the U.S. non-farm employment change report will be released tomorrow morning. And because of this, and looking at the currency strength index, you can see that the currencies for the most part are moving very sideways. Now, we do have the euro here in red moving to the upside, and we can see that the Swiss, since it's pegged to the euro, is also being pulled to the upside a little bit, and the yen here in light blue is moving to the downside, and we'll be taking a look at that chart, of course, here in just a moment. The rest of the currencies are trading fairly sideways, barring the pound, which during the London session saw a rise based on news. The non-change of the interest rates there did put the pound into an upward move, a pretty sharp move to the upside, I might add, and since that point it's been actually retracing back a little bit, and that was the play, one of the plays that we put off in the room today, expecting it maybe to retrace a little bit more than it did, and part of that is the fact that the dollar was not cooperating and not seeing the strength that one would have liked to have seen. News came out this morning. We did see the dollar take a pretty sharp move to the upside. It gave us some encouragement of that trade, but in the end it just was not the best selection. Right direction, probably the wrong pair. It just did not have enough power to continue the run and produce anything that would be substantial, although it has definitely moved in the right direction. You look at the rest of the currencies, the market is at this point really trading flat. We're well within 24 hours of the U.S. non-farm news, and that is understandable. When we look at the report, looking at the Bloomberg survey, the largest survey of analysts, their expectation on average, the median estimate, is at 163,000 jobs created, which is still a very low number, but it's slightly ahead of the 157 that was reported last month. Now, the key there is going to be whether we exceed that number. Remember, on Wednesday, and we saw the dollar trade up on this yesterday, the ADP number was ahead of estimates, and so there's a little bit of anticipation, a little revision in some of the analysts' opinion that the non-farm number might also be a little bit higher than they originally were suggesting. So a report that would come out maybe 40,000 more, 30 to 40,000 more, get us close to the 200,000, or if we can break the 200,000 number, which would be ideal. Mentally, think about how you feel when I say that number. Mentally, that would be a huge positive in the marketplace and would be a fundamentally good event for the dollar and the U.S. market. Equity markets. The flip side is if we miss this number, which I hope is unlikely, but we have to consider the possibilities, and so something that's just even under 150, let alone somewhere in the 125 range, or heaven forbid less than 100, highly unlikely. But those highly unlikely scenarios is what causes radical moves in the marketplace, so you have to take a consideration of that. So consider a 30 or 40,000 job band on both sides of the current estimate, so that would take us up in the 190s to the upside at 30,000 plus, and if we're looking at 30,000 minus, we're in the low we're below in the low 130 range, and so I think from a mental standpoint be 125, and on the upside it'd be 200,000 plus or more. We also want to focus in and see if last month's 157 gets revised up or down. Of course, it's always ideal if we exceed numbers and we get a positive revision to the previous report, or we don't exceed numbers and we get a downward revision. It's always ideal if both of them are moving in the same direction from a fundamental standpoint and a trade perception standpoint, and we would definitely like to see that. So the marker is kind of laying in wait. Now let's look at a couple of things here. First, if I remove this from the screen, you can see, looking at the yen pairs, you can see the euro yen here and the pound yen have in fact moved to the upside. Now the euro yen's been the biggest mover for obvious reasons. I just show you how the pound doesn't really have any strength. As a matter of fact, the move it had to the upside from the news during the London session, it's basically been scrubbing off. Where the euro has been pretty strong, what it's done now is tapering over and basically moving sideways. Again, in anticipation of one of the most volatile reports during the calendar month. But you'll notice it's over 124. It's 124.50, so it's taken out the resistance levels that were at 123.50 where it paused, and 124, which it really didn't even bat an eye at. Kind of was able to go through 124 a little bit easier than I would have thought. But we have the greatest divergence between the euro and the yen today, bringing that pair up very strongly, and a nice move indeed. The other side, you can see, because of the dollar's lack of ability to move, look at the top row. We have euro dollar and euro yen on the left side of this page, and I have pound dollar and pound yen on the right side of the page to do a direct comparison. So you can see how the yen pairs have been able to move up, but because the dollar's moving sideways and because the pound is moving sideways, you can see, the pound's moving down a little bit, the euro's moving up strong. So we look at this euro dollar, we can see that it is trying to move up. That's not on the dollar, that's on the euro's strength and not the dollar's activity. And we look over at the pound dollar, we can see overall it's been moving down. That again is on that pound retracing from its news and its sharp move to the upside, and not anything the dollar was doing. We have played the pound dollar short today. It didn't really achieve the results one would have hoped. Largely, in fact, maybe looking at a dollar pair on a Thursday in front of non-farm payroll in retrospect probably wasn't the best idea, but the setup was there and it made sense at the time. It's always easy to see that after the fact. Now let's look at this euro yen though, because this is breaking some technical levels, and I'm going to show you the chart that we have been discussing is the if we look at the going back and looking at the support levels and the resistance levels that I marked on that chart for us previously. Let's see, there we go. This has really done something nice technically. Now, I've been very open the fact that I would like to see this pair continue to trade down, but I've been also adamant about the fact that we have to look at and consider both possibilities when we're looking at the potential trades. So, bringing up the wrong chart, but here we go. So I've marked the trend lines, and this is that consolidation, the triple top that we've been talking about. That's the 167.70 range. I've covered this very well. I don't need to go over all this, but we can see that when it was in transition, it was setting the lower highs and lower lows. And I've pointed out to you that it started forming this pennant down here because it broke this very sharp drop and brought it below the support level of that trend line. And that was kind of exciting. It was a great opportunity. There were some tremendous trades made in the yen pairs during that Tuesday. But as it has tapered forward, as it's gone forward, it started consolidating, and see that the buyers were coming in at a higher price and the sellers were in there, and something had to give. And so in the previous reviews that we've been discussing, we got up here to the trend line and we're using it both as support and resistance, and then just recently we moved above that. And so my suggestion to you was, not only did it break that pennant to the upside, which was not my preferred direction, but as long as it's moving, I'm happy. But you can also see that the lows have accelerated. This pair is on the move. And so not only have we seen buyers really stepping into the pair, but we now have it what was the original upper trend line, which should be resistance. We have it trading right in that resistive range. So the 124, 124 and a half, it's actually slightly above that resistance point, and that would suggest that this thing, the buyers have entered the pair again. I don't know how much of this is being affected just for lack of dollar trades today, but at this junction a pullback is more than likely going to set a higher low, and we can start talking about these lofty levels like the 125, 126, 127s again, and maybe even getting back to that high. It's going to be interesting when it gets up there. It's definitely going to be met with some resistance, but we definitely have some acceleration into the euro yen and the yen pairs in general because of the weakness that is now back in the yen over the last 2 days. Is it a short-term situation? I don't know. I still contend that we had a pretty substantial event in the yen to the upside from February 12th on, but not today. And so we'll have to watch this very closely to see where the opportunities unfold. A pullback that does set a higher low does in fact become a long trading opportunity. And again, depending on how far back it pulls, maybe that 123.50 range, or maybe just a 124, but 123.50 would be a little bit more ideal at this point from a technical standpoint. And that's what I would be looking for. For the balance of the day, the word would definitely be not to trade. There's really no reason to try and enter a trade when we're almost 12 hours, or not quite 12 hours, but we're 20 hours to the non-farm payroll release. It just really would not be the most effective or wisest move to make at this point. Looking at the yen pairs, to take a yen trade at this point, obviously you would be chasing them and would put yourself in a high risk, and the reward factor of that is probably greatly diminished as we move forward. Let's put up the I'll put up the Swiss yen real quick, and you can see that it also has been a mover on the marketplace, and we saw that the Swiss was moving with the euro and has a very similar chart pattern from that Swiss strength, and of course the yen weakness. All the yen pairs are seeing a similar upward move today. The question is whether they can maintain it as we get into tomorrow and the news release comes out. So look at both sides of the coin. Consider what the positive would be on a report. Again, 25 to 30,000 jobs or greater. If we could hit the magic number of 200,000 plus, that would in fact surprise the market. That would be a huge fundamental positive and trade positive perception in the marketplace. It should, from a fundamental standpoint, it should kick the dollar up. Don't know that it always acts fundamentally correct, but that's what we would anticipate from a fundamental standpoint. Your job as a trader would be to sit out for a moment and let the knee-jerk reaction go through the market, and then approach once you actually have some trend and some movement identification that you're comfortable with taking place. That's always going to be the case on a major news report, and the non-farm payroll is definitely one to consider that way. We still have some upside potential in these yen pairs, but they're running out of steam just because of non-farm payroll. If it was any other day of the week and we were beyond this type of a news report, it would probably be really looking for any small pullback to take a continuation trade to move into these pairs, but it really becomes a fairly risky proposition considering how far they've moved today. This will increase the average trading ranges on the euro yen and the pound yen and the Swiss yen today. They are the three most actively traded pairs as far as daily trading range and potential. And I think tomorrow, because of non-farm payroll, we could get some nice volatility there as well. And so we'll see those average trading ranges probably maintain where they are. The euro yen's average trading range currently is in the 250 pips per day range, and so it's definitely exceeded that today. So we're going to see that expand, which is a great opportunity for us as traders. So if you would like to know more, you have any questions about trading a major news event or looking at pure price charting such as these range bars, the Forex range bar charts.com, we'd love to share the information with you. Invite you in on our trade floor. We just have a simple questionnaire we'd ask you just to get to know you better. If you got some questions, post them on the videos, subscribe to the channel, and send your email requests if you have any. My name is Derek Schimming with ForexRangeBarCharts.com, and as always, I want you to have a great day trading. Thank you.